Happy Friday, traders. It is, woo, that news is really high. It is 8:01 on Friday, the 24th of February, 2023. A quick sound check, please. Make sure I'm not blowing out your speakers or popping or blurring, distorting. This is episode number 2417. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hello, hello. Happy Friday. Happy Friday. A quick rundown in our Friday, every other Friday tradition. Pop in there. Let us know where you're at right now. And if you want to be contacted, please make sure to include your at Twitter or Instagram. Please do not post phone numbers or emails. Let us know where you're from, city, state, country, so everybody can see who's around them in here. You might want to go back to this video actually and look at the comments. Some folks don't watch it live, end up adding it later on. Again, for me, it would be Chicago, Illinois, United States at Futures Trader 71. In fact, let me just put that in there. This is the format. Chicago, Illinois, USA at Futures Trader 71. There you go. Appreciate that. So let's dive into the Convergent Trading pre-market summary sheet as we always do. Those of you who've been around for a long time now, notice that the process is the same every single day. Every single day we're doing the same exact thing. This is the base. This is actually the foundation of our approach to trading or to doing anything. I mean, if you're a basketball player, there's a process to doing your warm-up. There's a certain way you're going to hold the ball. There's a certain number of bounces to the ball. There's a certain shot you take. There's a certain number of those shots. There are spots on the court that you'll take that shot from, and so on and so forth to warm up. There are specific stretches. This is our stretch right now. So we're warming up for the market here. The Convergent Trading pre-market summary sheet says that the market is mild risk off. It has gone a little bit deeper since, not by much, but we had some key figures come out of the U.S. today. The U.S. core PCE price index, a very important number for the Fed, came in hot at 0.6% versus 0.4. 0.4%. Personal income was lower, 0.6% versus 1% expected. Personal spending was quite a bit higher, 1.8% versus 1.3%. So prices ticking up, spending ticking up. Prices are going up, so spending is going to go up. And then personal income coming down. So look for debt to increase in the U.S. In any case, this is not what the Fed would want to see. The market responded by selling off. The Nasdaq really started running down right after this number. Really started pushing lower and has gone quite a ways. So higher than expected PCE price index. Fed's Mester says going to have to do a little more on rate hikes, If you remember, just a month ago, they were starting to tell us how things are looking good and they may need to keep raising rates and maybe hold them longer, but they don't need to raise them at the same pace. Lower than expected German GDP. China's 12-point peace proposal, which is being absolutely disregarded by Washington and the Ukraine because China has been on the side of Russia, and so putting out a peace proposal naturally would put more favor to Russia, supposedly. I don't know. I haven't seen it. Don't care. But how does this impact us, this news on China? The way this impacts us is that the U.S. is saying that there's evidence that China is sending or is supporting the war on the Russian side, which would subject China to sanctions. And there's where the ball game is. Now, if you remember, During Trump's administration early on, there was a lot of flexing against China by imposing tariffs, which you and I both know since we're traders and we pay attention to economics. You and I both know that imposing tariffs on China makes those products expensive for Americans. Tariffs are taxes on Americans for that product, and tariffs are intended to make the domestic or other products more competitive so that we would choose something else. Unfortunately, there's so much being imported from China that it's just a tariff and it ends up going into the U.S. Treasury's coffers. And recall the impact that had on trading, and any announcement, any talks about tariffs caused the market to have these news events, volatile news events, and we're kind of seeing, my point being, this China proposal kind of heads in that direction where we start to impose sanctions, which the U.S. already did today on a few companies, and this creates a problem, right, for the globe supply chain and so on. So that's how this translates. There's a slew of Fed speakers today. The Department of Justice preparing suit to block Adobe's $20 billion deal for Figma. Figma is a really cool online tool where you can just design websites and whatnot and be able to scroll through them without actually doing the design, without actually doing the development. 10 o'clock today, we have U.S. New home sales. This is a two-star number, expecting 0.4% month on month, and new home sales looking for 615,000 units. We've got Michigan sentiment final. This is not the prelim, the final. This generally doesn't move us all that much, expecting 66.4. And the Michigan 5-year inflation expectations final is looking at 2.9%. We may want to pay attention to that one. And then we have Fed's Jefferson speaking at 10:15, Fed's Messer at 10:15 as well. And then we finish up with the Baker Hughes rig count. And that brings us into the weekend. Okay. So that's where we're looking. And that's the big picture. Looking at the S&P now, zooming in on the S&P, 309,000 contracts and a trending profile. We've got multiple distributions with the market accepting lower and lower and lower prices. The market has shifted away from yesterday's settlement. We're down 51.5 points. We finished strong yesterday, and we've been finishing strong, then selling off, then finishing strong, then selling off. Market is really in an aggressive balance zone with a price discovery intraday. Kind of an interesting situation here, but 310,000 contracts is well above the volume mode for the overnight session, which is 220. That's down here. Boop, boop, boop. 220. The volume's 310. The extreme of what we would call normal is 330,000. So we're on the upper end of what we would call normal. The inventory overnight's 94% short, and most importantly, the range is 60.5 points. 60.5 points. The edge of normal is 55 points. The most common is 31. A lot of activity in the overnight session. A lot of weak structures left behind yesterday and today's overnight session. So there's quite a bit to do today, in my opinion. So today is not one of those days where I tell you, it's opening here on top of this, on top of that, on top of that, and it's likely to be choppy, whatever. I'm seeing that the market is opening out of the prior range, and I'm expecting pretty aggressive action early on with the range overnight, which we use as a kind of a rule of thumb. The extended range overnight tells us that we are very likely to see pretty decent action today. Here's what I was looking for yesterday. What I was looking for yesterday, we were opening above the prior day's range, above the overnight. And what I had talked about yesterday is look for a test of 30. Now, if you remember, the 30 is this big line between the upper distribution all the way into the 4100 and beyond. And then below the 30, we start to move into the most important price in the area, which is 39.88, right? We've been hitting 39.88, right there. Um, and so I expected a test to 30, and I expected a drop as the primary scenario, and I was looking for 39.99, the settle price to be tested. Boom, right there. And this is kind of going far into the future here in terms of predicting probabilities of outcomes. Then I was looking for a bounce into the close, right? So I was looking for it to go down, test the prior settlement, which happens to be on top of the point of control, the prior day's point of control. A huge magnet down there at the 4,000, the prior point of control and settlement all at the same price. So I was looking for a traction down there, and I was looking for that to hold, to kind of chop around. This is that little squiggle here, chop around, turn around, and finish up higher into the 40.25 or so area where we were in the overnight session. Here's what actually happened. So that was the plan. You were here for it. If you watched yesterday's Trader Bite, here's what actually happened. Market opens above the prior range. Okay, the prior range high is right here, this line. We open above the prior range, we test the range, go up to 35, was it? 34. We went to 34, I believe. Remember, we're looking for a test and failure at 30. And then boom, we have this explosion downward. So it's really about looking to the short side. So where can we lean to look for the short side? Tough hold. Yesterday was one of those days where the short setup got stopped by a tick before it continued. And statistical probability of that is surprisingly high, I guess. But we pull back into this VWAP mid structure, and then we continue and we break the IB low. We have a range extension through the IB low, and what happens after that is very unsettling in that we end up we're looking for it to get down to 39.99, but because it rejected, look at the big prints here, it rejected this push down into 40.15 and went back up. It was a really tough hold. It was really tough to be short yesterday, and that was the theme yesterday. That was the theme Tuesday. If you recall, I talked about this on Wednesday morning, that it was really hard to hold that push down, that walk down on Tuesday, despite the fact that the auction and the market structure was clearly, were clearly saying that you want to stay short. I found that it was really hard to stay short and ignore the order flow and the price action. So there's a lot of activity in that yesterday. We traded about 1.8 million contracts in the ES. That's a lot for the ES. So there's a battle at every price that's going on here. So we're at this, in this area that we're going to look back to in probably a month or two and say, oh yeah, that was a big inflection area that may be a swing bottom or something. Then it goes back to the mid again, and then explodes downwards, and then finally gets to the prior settle. So my prediction was test 30, come down, in some kind of way. I don't know how it's going to come down. Come down to the prior settlement, right? 99, consolidate here, and then finish at 25. And what it did is it went well below that, and I want to talk about that for a second. It went well below that and pushed all the way to 39.75 before coming back. And where does it close? Where does it go back to? It goes back to the 25, right there, just as expected. But it ended up trading much, much lower than expected, which market doesn't have to do what I expect. I mean, I don't expect it to do what I expect, but I'm just playing the probabilities, and I'm looking at the auction process and just trading the auction. But what this says, interestingly, yesterday, if we look at the TPO chart, what this is saying, this is the NQ, what this is saying is this. This is where the auction narrative is important. Pay attention here. Let me scroll this up. What this is saying here is it opened above the prior day's range, okay? It poked into the prior, it attempted to push higher. We ended up with a double TPO high, a weak high at that high of 34 and a quarter, very early on. Then it traveled through the entire range of this balanced day, the entire range. So it was really a battle all the way down and pushed into the settlement price of $39.99. Then it managed to actually break the prior low, test into the 75 or so, and then it made it all the way back through the prior range low, the prior settle, the 4,000 millennial figure, and then finished right up here at 25 or so. 1875 is the settlement price. So came all the way back up to 25, settled at 18. To me, this looks like an absolute rejection of prices below 4K. That's what normally this would mean. To open above, go all the way through, come back through, test above, and finish at near the high in the upper quartile of the range, back into the IB. This normally says that we had a very healthy liquidity check down below. We checked prices. We did successfully find buyers, enough to push us all the way back up. So the buyers were activated into the close. And so I would consider this an important reversal day. This is what this is. So on a candlestick chart, this would look like this, with a filled in candle, with a red or black candle, depending on your software. This is what this should look like, and this is a wick, and this would represent an excess or rejection. And what we did not, so we saw that, and it's all well and good. Then we reopened this morning. We reopened pretty healthy. We reopened, and then we spilled it well before the 730 number. So the 730 number is right in here, and we've been traveling all the way down and through the low. This is very unusual. So the narrative then becomes, wow, those buyers, all those buyers that defended the low, brought it all the way back up and finished in the upper quartile inside the IB. All those buyers are getting flushed now. The sellers have it, and this is likely to continue. But careful, because every time we've thought that in the last 2 weeks or so, it has come all the way back. So my view is we're in this large kind of balance is what we're doing. So this morning, we're down here. We have broken back into, we've broken away from the upper balance. If you recall, we've talked the heck out of 41.45, 41.50, and then we moved away, we moved down. Now we've got a couple of days of overlap. So this day overlaps that day, so we can merge that. Yesterday overlaps the prior day, so we can merge that as well. So now we have this really sharp kurtosis. We have a histogram that has a very narrow value range. And so this is fuel for the move down, or according to yesterday's trading, this was really excellent fuel for the move back to 40.90. And then this morning we find ourselves much lower. So what we've done is we've kind of carried the point of control from here to here. We're accepting these prices about 40.15 or so. We've battled the 40.15 quite a bit in January, and then we've pushed away with the Fed in February. We battled 41.45, 41.50 throughout February, and now we've given that up and we've gone back to January's acceptance. So that's okay. But now we're really testing these lower prices. And to me, any response, normally, any response back up here would be a sell. I would look for areas to lean against, and I would look to get short and probably campaign into a bigger short and look for the rotation back down. But the problem is, every time we've poked through, we've swept and then come right back up and return. So I'm going to sit this one out. I'm going to watch to see how the first hour, the first half hour responds. I want to see what kind of liquidity comes into the market and who the aggressor is. Does the market become responsive this morning and come right back in which case we would be targeting the 40.15 yet again, with 40.18 is our gap to settle trade. So I'm going to be looking, does it do that, or does it make a weak attempt and break down? And if it does break down, then we're looking for the lower distribution of this balance zone here, which is down to 39.20 would be the next key target down here. So 39.20 would be the run to the downside. This is a kind of a point of inflection here. This is an important session today where we get to see which side really has the better cards, and we want to see, does it become responsive and regain the range of the last few days, which is what this composite profile is made of. And if so, then we're looking for 40.15, 40.18. If it doesn't, if it's not able to do that, then it really has a pretty swift, most likely swift direction and energy to push down to 39.20. I'm seeing the same or similar thing in the NQ. If you look at the NQ tested this point of control at 12,000, basically 12,050, and moved back up, right? Then the next day we open higher, we test down, and we never take out really the low by much, and we finish strong. So yesterday, looking at the NASDAQ last night, I'm like, wow, the NASDAQ is really ready to get back to that 12,500 I mentioned yesterday, except this morning it's even lower, right? And so this this is moving away from this acceptance, and this balance down here has already been checked, and so it opens up the road to 11,590 down here, we'll call it 11,600, because, you know, what's 100 points here or there for the NASDAQ. But that's what this sets us up for. So for the NASDAQ, same story. We want to see, does it come back into yesterday's range, and does it get bid? If it does, you have a pretty good run at that 12,200. Could get there today. If it's weak retesting, then it's likely to start flushing whoever was participating on the buy side. Remember, in futures, for every buyer, there's a seller. There's no float. There's no dark pools. There's nothing like that. No shenanigans. Every buyer has a seller, and somebody's holding the bag all the time. Who's holding the bag, and how big a bag is it that they need to get rid of? So this is what we're looking for today. Again, I can't predict the future. All I can do is read what it's done, and based on the nature of auctions, try to understand what it could do. And then my job next is to now refine. So that creates my bias, and now refine or identify areas through stock zones or whatever, refine the areas that I want to participate in and lean against. And the importance of the areas I'm leaning against is to define risk. That's the primary reason we look for risk. We look for support, resistance, or statistics, is to define risk. Once risk is defined, the trade is on, and it does what it does. It does what it does. Okay, so here's what we're looking for today. Hopefully you've gained something. Thanks for piping in and telling us where you're from. Appreciate that. Again, I'm in Chicago, Illinois, and you can find me on Twitter at Futures Trader 71. Okay, Please take a moment to hit the like button for this video. Take a moment to subscribe to the YouTube channel. It's free. You just get notices every time a video is posted, and it allows you to comment and things like that. I welcome your feedback and comments about these videos. Good luck. Pay attention today. There's likely to be a lot of movement. Good luck.